So you have reached the trigger rate with the latest interest rate hike. What do? I've been talking a lot with my clients about this particular topic, as each and every single one of them have a different kind of idea of what they want to do with their mortgage. So I want to provide you with my kind of next best options of what to do next, given that you have hit the mortgage rate. So if you are concerned about the mortgage, or you've hit the trigger rate and what it means for you, you've come to the right video. I'm going to break it all down for you so that you understand what's going on, because there's a lot of noise out there. Now, if you are looking for help for guidance in navigating this real estate market this fall, and that's more transparent, data-driven, and results-driven specifically, you can book a strategy call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run a RE/MAX brokerage in the Greater Toronto area, on top of making awesome content like this that helps you in regards to this trigger rate. And trigger rate, oh, trigger rate indeed. So many headlines about it recently. Now, I initially thought it would be kind of a big deal in the market back in June when I kind of talked about it, because we were coming up to the 1% rate hike in July, right? But that was before I knew the bank's response to this. So I suspect it actually will not be a big factor in the market. And let me explain why a little bit later. But let me give you a quick, simple layman's term English of what this is. So the trigger rate applies to people who have a mortgage at RBC. So over here, CIBC, BMO, and TD. If you're born from Scotia, doesn't apply to you. So when you go get a mortgage, you may or may not have known with these banks, you would have something called a variable static payment, meaning if rates go up, your payment stays the same. Normally not a problem. However, when rates go up 3% or 300 bips in 6 months, you get the trigger rate issue. The trigger rate is the interest rate where your monthly payment that you're paying right now does not even cover the interest payment because the rates have gone up so much. Remember, your monthly mortgage payment is a percent that goes towards interest, a percent that goes towards principal. So when the rates go up, you pay more interest under this type of product, and your payment schedule, what they call the amortization, falls behind because you're paying more interest. So the trigger rate is when you're paying zero principal and your monthly payment no longer covers the interest rate payment increase. So the latest 75 basis point hike caused a lot of these trigger rates to be hit. Now, there is something called the trigger point. This is slightly different, but the trigger point is when you start losing equity, meaning you are behind on your payment and you're losing principal paydown to the higher interest rate. Now, the trigger point for each bank is different, so you should go and call your bank to see. Not your mortgage broker, your bank. Now, the trigger point is when your bank will likely call you to kind of rejiggy your payment structure because you're losing equity and the bank doesn't want to be in a negative equity position. So, what are your options and how does this affect the market? Let me explain. But before that, if you found this content useful, make sure you help me by smashing the like button and sharing this with people who may benefit from this, because we're trying to prevent a lot of people from making a bad decision in the real estate market right now. And while you're at it, make sure you subscribe to the Prime Properties channel. And if you want to work with someone who has knowledge of all of this stuff that's going on in the fall market, you can book a strategy call with me using the link that's on the screen. It's www.chatwithzen.com. Okay, so your options are, number one, you increase your monthly payment so that you catch up with your amortization schedule and stay variable. And you'll get a new trigger rate and trigger point, but it could be a big payment shock for some, depending on the size of your mortgage and obviously your own financial situation, right? Now, the banks may advise you to go and get a fixed payment at this juncture as well. And I will say there's some merit to it, since fixed and variable are kind of the same thing right now. They're on par. Number two, you provide a lump sum payment so that you stay on track again for your amortization. And this amount depends on, again, your mortgage and the bank. So you should definitely give them a call. They'll probably want to work with you. And number three, this is what I call the Canadian thing, kicking it down the road, all right? Each bank has a different way to approach this, but I've spoken to 3 banks I have a mortgage with, and they essentially allow you to make interest-only payments and pay $1 to your principal to keep your monthly payment low. right? Now, let's kind of talk about the effect it may have on the market. I personally don't think it will be as big of an issue anymore now that I know how the banks are responding, especially with option 3, because most people out there, if they don't have the funds, they'll probably pick number 3 of kicking it down the road with that, what is essentially an interest-only payment on your mortgage. You remember the mortgage deferral cliff that everyone's talking about 6 months after the pandemic? Yeah, this reminds me a lot of it right now, all the chatter. Essentially a big issue for some, but not a big systemic issue for all, right? Now, I think where we will have an issue in the market is when these mortgages come up for renewal, say in 4 or 5 years, right? In 2025 and 2026, depending on when these people got the mortgage. And I don't think we're going to see a mortgage rate of like 1.5% anymore. So everyone who recently got a mortgage will feel the payment increase when they go for renewal regardless. It's just they're kicking it down the road right now. So that's when you no longer can kick it down the road on renewal and you got to pay the piper. However, if prices, increase between that time period, it'll allow for a lot of people to refinance and resolve their monthly payment by kind of stretching out their payment on how long it takes them to pay off their mortgage. Or, if TREB gets their way and, we somehow squeeze OFC to give us a 40-year amortization back again. See, that's kind of like my close note of this trigger rate, trigger point, and just thought processes at the moment and, things I want to share with you because I've been talking to a lot of people about this topic, right? So if you want to work with experts in the know like myself, you can book a strategy call with me using the link that's right here. It's www.chatwithzen.com. And hopefully this gives you an idea of what you can do with the trigger rate and the trigger points, because I know for me to get to option number 3, if you absolutely need it, I had to kind of ask a couple of times of these bank advisors because they weren't really even sure that was a product that was available. Anyways, until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.